In this phase 1, we are going to be talking about the newly national taxation implementation. New tax laws now being implemented. 4 major tax reform bills were signed into law on June 26, 2025, replacing outdated tax rules with a unified, modern framework. These are collectively known as the Nigeria Tax Reform Acts. Effective January 1, 2026, the remaining new tax laws are being implemented despite public debates and legal challenges. This means that Nigeria's tax system for 2026 is significantly different from what applied in previous years. Key structural changes: new unified tax framework. The Nigeria Tax Act 2025 replaces multiple old laws, including the VAT Act, Income Tax Acts, Petroleum Profits Tax Act, etc., and creates a single, consolidated regime that is easier to administer and enforce. Tax news. Broader tax base, including clearer global income rules for residents. Minimum effective tax rate rules, particularly for large companies. Tax news. Corporate income tax reduced. The corporate income tax, CIT, rate has been lowered from 30% to 25% to encourage investment and growth. This move is estimated to reduce government revenue by roughly 1.4 trillion Nigerian nairas in 2026 but is intended to spur business activity. Institutional reform, FIRS, Venus. The Federal Inland Revenue Service, FIRS, has been renamed and restructured as the Nigeria Revenue Service, NRS, with expanded authority and a digital-first tax administration approach. Impact on individuals' income tax. New tax rules include updated tax brackets, minimum wage exemptions, and broader definitions of taxable income. For many lower-income earners, tax liability may be reduced or eliminated, while higher-income groups and expatriates will face new rules. Bank transactions and tax IDs. There have been discussions, and some clarification from authorities, around linking tax identification numbers, TIN, to bank access, though direct debits without due process are officially denied by government spokespeople. Also, payment narrations may now affect tax profiling under automated systems, so clearer descriptions on transfers could matter more in 2026. Innovation Village. Impact on businesses. Simplified tax regime. The reforms eliminate multiple tax collections by different agencies and centralize tax administration under the NRS, which should reduce bureaucracy. VAT and exemptions. Essential goods and services like food, healthcare, education, transportation, and accommodation have been exempted from VAT to ease living costs. Public debate and controversy. These changes have sparked significant public debate, legal challenges, and political pushback, mostly around transparency, implementation timelines, and potential burden increases for some taxpayers, but courts have upheld the reforms. What this means this year. For the rest of 2025 and into 2026, the new tax laws are fully in force as of January 1, 2026. State House, Abuja. All individuals and businesses are expected to comply with the new regime. Tax compliance will rely more on digital records and the new Nigeria Revenue Service system. The Guardian, Nigeria. Nigeria's taxation policy this year reflects a major fiscal reform aimed at modernizing the system, broadening the tax base, reducing certain tax rates, like corporate tax, and simplifying administration. While controversial, the reforms are actively being implemented and enforced in 2026. Business post-Nigeria. Across the crime, Phase 1 conclusion. This first phase of our coverage has focused on understanding Nigeria's new taxation framework, what has changed, why it has changed, and how it affects individuals, businesses, and the nation at large. By laying out the structure, intent, and official justifications behind the Nigeria Tax Reform Acts, Across the Crime aims to equip citizens with clarity, not confusion. However, policy changes of this magnitude often come with unintended consequences. Where systems evolve, criminal opportunities can emerge, from fraud and cybercrime to corruption, tax evasion, and abuse of power. Pushpin Phase 2 is coming. In the next phase, Across the Crime will shift focus to the dark side of taxation reforms, examining the bad attributes, crime risks, loopholes, and exploitation that may arise if vigilance, transparency, and accountability are not maintained. Stay informed. Stay alert. Across the Crime returns with Phase 2, exposing the crime perspective behind taxation. Across the Crime. As Nigeria enters a new era of taxation, understanding the structure and intent of these reforms is essential for every citizen and business. The Nigeria Tax Reform Acts represent a significant shift aimed at modernizing revenue collection, strengthening the economy, and improving governance. Yet, with change comes responsibility, both for authorities to enforce the law fairly and transparently, and for citizens to remain informed, compliant, and vigilant. Across the Crime will continue to monitor how these policies unfold, not only from an economic standpoint but also through the lens of public safety, accountability, and justice. Awareness remains the strongest defense against misinformation, abuse, and emerging crime risks. An informed society is empowered to protect itself, and staying alert today helps safeguard the nation's future. Across the Crime, tracking policy, exposing risk, and keeping the public informed.